Reloading bearish positions as the market rallies and finding the rare long positions in this market. Gary Glover from Novus Capital is going to walk us through the best trades on the market now. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
Now, we saw a decent bounce last week, and that was on the US markets, and there was a fair amount gained. But you're selling into that rally. So do you see this as a bit of a short-lived spurt on those US markets?
Yeah, that's right. So I'm hoping for a bit of we trimmed some of our SNAS and BBUS there previously. So I've been sort of looking for a bit of a rally. So something like a, 5 to 10% sort of move would be quite nice on index. So yeah, had a bit of a rally. Probably watching some sort of short-term timing here. So I feel like we're pretty close here. Typically, bear market rallies is pretty short and sharp. So just get a bit of a short, sharp move and then turn back down again. So yeah, so I've kind of be looking to reposition there. So I've actually added, with a strong move in the weekend and the strong futures here today, I've actually added a little bit of the SNAS and BBUS back into the portfolio. So yeah, just gonna if I get another day up here, I'll probably add to it again.
Okay, so you're not seeing this rally go for much longer. What kind of levels? So you've got the charts here, you've got sort of the targets of June, July, which haven't changed for a long time, and they've kind of touched earlier than you expected, but rallied out of that zone. How far do you think they'd rally? Sort of a couple more percentage points from here, or something different than that?
Hopefully, sort of I sort of got a bit of short-term timing here, which is sort of tells me that kind of around around tonight or next night, or I guess we're kind of within sort of 1 or 2 days of sort of now. It sort of would be a good timing for another sort of lower high. So I was looking for a bit of a rally up into the end of this month, because that'll leave us a month sort of downside there. So if we get a last leg down here for this section into, just want to sort of see something. So I still think that 10,000 is a minimum. That the old high has always been my sort of preference for a target. Can't rule out an overshoot. Sometimes you get an overshoot here, but yeah, that's what I think here. So I think any rally here is a chance to sort of get back in here. I think I'd probably just go a little lighter than the heavy position I had before. But saying that, I still think we can come up here. Oftentimes the last leg can be sharper and can be more aggressive. So yeah, could be a decent move.
Well, the US definitely had a decent move running into the end of the week, but the Australian market seems like it's lagged behind in that rally.
On that just on that S&P chart there, Chris, see how like the last on the way down there we've had like a little 1 or 2 little bounces there. So really looking for that. I was looking for the market to sort of come back up and retest that bounce zone, which it's sort of on the daily, it's sort of done that. The weekly is just shy of it. But on the daily chart there, it's actually sort of tagged the bang on level there. So it's a bit of a critical level on the daily. So so I still think that'll, if it fails here and turns down here, I think you'll see something reasonably sharp to the downside there.
Okay, so that's sort of coming up, touching that point, and then possibly getting belted back down into this zone.
That's what I think should happen. Yeah, but look, we'll find out here in the next couple of sessions there. But yeah, just underneath the last swing low, particularly the dailies. Weekly is slightly different level, but it's the same principle. But if it sort of rallies up underneath the last swing low and fails, that's where they can turn down from. So just normally these sort of bare legs normally have a few legs down. So I just think there's at least another leg down here, I think.
Okay, so that's the S&P becoming quite specific, cute with those levels and those swing lows to look for and retouch. Yep. When you look at the Aussie, that rallied from last week wasn't anywhere near as strong, and it's been muted in the falls as well. Is this still the same thing that you're looking for on the Aussie, or have you got a different outlook?
Yeah, similar there. So we've had a little bit of a bounce here. Obviously, we had a really aggressive reversal at the top. Then we had 1, 2, 3 really strong down weeks. Really sold off aggressively. pretty heavy volume on all three of those weeks. Had a bit of a bounce here. The volume's a bit lighter on the bounce. The ranges are pretty tight here, so it's not really bouncing with any gusto. So that's still, I still think with this marginal new high, we'll see a marginal new low. So that's still around that 6,700 zone. So nothing really changes for me there. Just the inside, couple of little inside weeks here don't really, small weeks is sort of normal behaviour there. So that's not really a sign of strength the way I view it. So I still think we'll see a slight new low there. So I think eventually here our index can come back back to 6,700 here or something like that.
Okay, so sort of much of the same for the index, 2 inside weeks, which is not too inspiring for a change of course.
Exactly.
Now, you've also put in this week's report the FTSE, so the UK index, main index there. It did take an incredible beating along with the rest of the market in the Russia-Ukraine crisis started. But you've actually pointed out here, it's almost back to its highs in contrast to the markets that we've just looked at. What's happening with the UK?
Yeah, it's quite amazing, really. You think, because everyone's talking about how weak the, European, sort of conditions are. Everyone's concerned about Europe from an economic point of view, and obviously, you've got your war in Ukraine there. You've got a lot of supply chain issues, a lot of food shortages, and sort of in those zones as well. So lots of issues there. Yet the index is almost it's only trading just underneath its high here, and very close to it's like a 5-year high as well. So it's really showing some surprising strength there versus the other indices there. But it is at a bit of a critical level there, just because you sort of had that high peeled down, retest the high, and then a bit of a peel back, and then going up again here. So so just be whether it fails here, puts a second lower high in, or maybe even might even go to a new high here. If it goes to a new high then fails here, got to watch those as well. So just interesting zone here. So just I guess one, I find it quite surprising that this index is so strong here, but two, we're a bit of a critical level here as well. So definitely one index to keep an eye on there. Just see how it deals with this sort of current high there.
Okay, we'll definitely watch that one. And other ones that we want to watch are some of the trading shares that you picked up this week. So you've got a discretionary company there, Adairs, which seems quite odd when we're seeing interest rate rise, bear markets. So what's two things with Adairs? You've got a red zone that would be good to talk about that you've highlighted on the chart. But where that red zone is, you've also got these blue numbers. So did you want to talk about what these blue numbers are and what this 61.8 line is that the red zone's near?
Yeah, I mean, look, I noticed on the chart there it had a big obviously correction down there. So it's had a fairly sort of sizable pullback. And I was just having a look. I can have a look at Adairs because Adairs is fairly robust sort of group there. Obviously, a bit of a Warren Buffett sort of stock, you might say. Pretty boring type of home decoration sort of a lot of that sort of furnishing, bedroom sort of stuff there. But just the massive price back there. I get everyone's worried about discretionary spend, and so the sectors have all had really decent pullbacks here. But if you look at Adairs sort of earnings there, it's on sort of about 7.5 times here. Sort of 22 numbers there, and if you look at, I think it's obviously had a good 21. It's going to probably just ease off a little bit on 22, and then sort of recover again 23. But it's only about 6 times. P of 6 times there for next year's sort of forecast earnings there. So I guess getting pretty cheap here from a valuation perspective. And I just think you're just sort of seeing here, everyone's getting concerned, everyone's talking recession sort of with these businesses. I just think it might be an opportunity. I think some of these have sort of come off pretty aggressively. So just watching the price action has come back, and they're just starting to see volume tick up a little bit here. Just seeing the price action starting to tighten up here. Got a few touches of that sort of lower little descending sort of wedge there, but still pretty early here, but I just think, this is sort of one that I think probably more longer term rather than shorter term here. But it could be a bit of a value play here. And yeah, I mean, it's the yield on the stock's probably around 7 or 8% or something like that. So it's pretty interesting here. So probably more of a medium to longer term rather than a shorter term play here. But yeah, definitely a bit of a value play here. So I sort of might start with a small parcel here if it weakens off a little bit. Just notice that 216 was around the 61.8. Just want to see price
61.8 there, Gary. We're going from the recent high that we saw in April 2021, and then you've brought that Fibonacci level down to the COVID lows, and that's measuring out the whole range from the COVID lows to the April high, and we're at 61.8% of that range, are we?
Yeah, look, it doesn't sort of necessarily work for a lot of, for all stocks here, but I just noticed that some of them were, the bigger caps sort of, defensives, and even the banks and stuff there, I just sort of think often they'll come back to those 50, like a 50% correction would be viewed as quite large. And then something like a 61.8 is really large. It's a decent correction there for a lot of these sort of bigger tier stocks. I know like your commodity stocks, your BHPs and Rios and stuff there, they often come back, 3/4 of the range. They definitely a lot more range bound type of stocks, a bigger sort of a bit more delta. But these sort of more, what I call more sedate sort of top tier sort of stocks here, to have a big correction like this, it's sort of quite rare. So occasionally they do this, but yeah, it's just quite rare because it's actually quite a large correction for the stock here. So yeah, just sort of one I'm watching here. Look, I'll be catching a falling knife here, but I think for portfolios looking for a bit of value here, pretty high yield and stuff there. I think this has still got some defensive qualities. We've still got, end of the day, we've had a lot of storm damage and stuff, Queensland and New South Wales. So, a lot of that sort of bedding and things like that would have to be sort of replaced as well. So, and I also think that Adairs is probably more of a, although it's had a reasonable sort of online result there, it is more of a, as opposed to some other retailers that are more online based, this is definitely more walk-in type of base. So if we go back to sort of more normalised sort of shopping conditions, I think this will probably be more advantaged by that. So so I just think it just looks pretty cheap there. When I look at historical valuations, it looks a lot cheaper than its average PE. It's like it's trading quite a bit lower. ahve was another one I looked at, but it's not quite as cheap as Adairs, and hasn't come off as much either. But if it were to come off another sort of 10%, might look at something like ahve as well. But I just think this Adairs is a little more defensive. Yeah.
Okay, so there's a defensive position of value play into consumer discretionary and recovering from lockdowns, economy, shipping, supplies. Another one that's taken a bath, you're talking about larger range bounds like BHP and Rio Tinto. You've got the Fib levels on Codan here. If we look at that range from the highs, or coming from the lows to the highs, it's come back. Is that 78.6% of the range and further?
Yeah, so this one's come back a bit deeper there. So it's a bit more erratic, this stock. It's had probably some history of having sort of bigger price moves and stuff there. But yeah, sort of been, it's got a bit of an odd product range set there. Everything's sort of metal detectors through to, sophisticated military equipment. So, so it's got quite a diverse range of products there. But it did have a bit of an update there last week, which was reasonably positive. And considering the price correction, that was pretty large. Market took it pretty well, so I had a bit of a jump there. I just noticed before that jump that the stock had been trending down, and then it actually bounced above bounced above a swing high on the way down. So it was the first swing high that was broken on the way down there. So I thought, okay, possible change of character. And then it was literally like a week later, we get a positive upgrade on the stock, and then the stock's had a bit of a jump here. So, we saw some pretty good volume coming down there in the low here as well. So signs of accumulation taking place. So, okay, it's an interesting price zone here. Interesting, diverse business. And, so the update was, I think it was, it was pretty well taken there. So we've got a bit of a fundamental trigger, also a big technical correction, and we're starting to see some accumulation there. So I think this looks actually, pretty constructive.
Okay, so a constructive movement while the market's going through its gyrations. You've also recently mentioned ING. We're talking about chicken. You've talked about the feed prices up in ING's reports, Inghams. And then chicken prices, we've noticed kind of trailed a bit on the beef prices, at least when you look at the barbecue chicken prices at the local supermarket. What about the technicals for Ingham? How's it standing out for you on this trade?
Yeah. So if you look at Australian agriculture versus Inghams, the charts are almost in the exact opposite. So one's a beef producer and the other one's a chicken producer, and gone totally different directions there. So I get there's concerns there regarding some pricing issues. Obviously, costing, increase in feed costs there obviously impact these guys, but I still think that these businesses can pass on these costs to the end user here. So I just think you'll see a bit of a recovery here. I think it's been hit pretty hard there. So it's all the same thing with select harvest. It came off pretty hard and bounced. So I think ING looks pretty cheap here. I think the agricultural space there, we've seen Elders, big moves, and quite a lot of those sort of rural-based stocks do quite well here. Just surprising this one's come off as hard as it has. But I just do think this is one that they definitely can pass the costs on. And I like the fact that it's gone to a new low here. So a bit of a marginal new low, false break here. So if it can hold here, that looks quite good here. So I think, if you can buy it sort of under 280 here with a pretty tight stop underneath the last low, then we got a pretty good risk reward there. So nice and tight stop, not risking too much. And then you got a potential upside in the stock as well here. So as you know, always looking for those good risk reward trades. So that kind of stacks up in my view.
Okay, and so we've come from those that have been down. We've got another one that's down, but also used to be a market leader a little while ago now. What do you read from the movement of BWX?
Yeah, just kind of caught my eye just technically here, just because it's had that sort of big run there for 2.5 years there, and then it broke down actually out of that sort of what we sort of call it, sort of broadening pattern there, but broke down the side there and then sold off pretty aggressively. It's had a pretty aggressive sell down to the point where it's actually, we're off 72% from its highs here. So in pretty quick time, and we've seen the volume elevated the last month as well. So just wondering, is that signs of exhaustion down there? Is a bit of accumulation taking place down here? Just a really deep correction there. Come back to retest the low, gone slightly above here. So always sort of watching for these sort of marginal lows. I think this one's got a bit of risk. I'm sort of probably not it's not a sector I'm incredibly inspired by, but technically the pictures has had a pretty large correction there. So if we can see some signs of strength here down at the last low there, it could be a zone where it recover from, but I'd be keeping this one pretty tight here, just because the sectors could get a little bit of risks for me. But it could potentially be an interesting level here if it can show some support here.
Right, well, that's another trade to watch on the week ahead. And then obviously if people want to get in contact with you, they can grab the number on the screen, the email, and that's if they want to talk about entry points or certain stocks in more detail. Do that as a client of yours. Is that right, Gary?
That's right, yeah, 100%. They can email me or ring us. That's fine.
Very nice. Thank you again, Gary Glover from Novus Capital.
Thank you, Chris.